Ghana's rapid disinflation, a rare success story among African frontier markets, is now under siege by a Hormuz risk premium. While the country has stabilized significantly under its IMF program, the transition from crisis-era inflation to growth-supporting rate cuts has been interrupted by the U.S.-Israel-Iran conflict. With Brent crude on the cusp of $120, the Bank of Ghana faces a brutal trade-off: continue easing to support local industry or hike rates to defend the cedi against a massive wave of imported energy inflation. To unpack this, I am joined by Dr. Josh Bamfo, partner and head of transfer pricing services practice, Andersen in Nigeria. Thank you for joining me today, Doctor.
Thanks for having me.
Right. Analysts say continued disinflation trend in Ghana opens the door for aggressive rate cuts. I mean, if I had asked you this question but maybe before February 28, would you have shared the same thought?
I definitely would, because at the end of the day, the Bank of Ghana, which is the central bank in Ghana, has two major goals. One is to achieve price stability, and second is to help with economic growth. After a success story in bringing inflation down to single digits and actually moving it from 3.8% to 3.3% from January to February of this year, I think it was obvious that they were going to start reducing monetary policy rate in order to make cost of borrowing cheaper and businesses to borrow in order to invest into either new businesses or expand existing businesses to create job opportunities. So that would have been my simple answer prior to February 28.
Now, post February 28, what's your answer?
I'm very skeptical because we are all aware of what is going on in the Middle East and the implications for crude oil and for oil prices across the globe. We all know that 20% of oil production actually moves through the Persian Gulf, through the Strait of Hormuz, into the open ocean before it goes to other continents. With Iran threatening that they will attack ships that would make any way through that particular strait, we know that the alternatives are dire. Either you use a much longer route or you don't supply at all. So our expectation would be that crude oil prices are going to skyrocket, and that's what we are seeing. Early this month, March 3rd, I think it was around $75 per barrel. Today is around 114, 115, and that's a huge spike. So we do expect Ghana, which actually is a net importer of fuel, even though it has some crude oil production, it doesn't have those quantities for it to offset the higher oil prices that they will be experiencing in Ghana. So my expectation would be the Bank of Ghana would take that into consideration and most likely during their Monetary Policy Committee meeting, hold the monetary policy rate at 15.5% as opposed to them further cutting it to stimulate the economy, and which would have been the case if not for the war that we're experiencing now in the Middle East.
Right. So apart from that, I'd like you to talk to us about other ramifications or implications of this war for the Ghanaian economy.
So it's going to be a bigger challenge because think of it, the economy has been struggling when it comes to job creation. One of the biggest selling points of the current government was to implement a flagship policy called the 24-hour economy in order to create jobs for the teeming masses, especially the youth. Youth unemployment is relatively high. So the expectation was to first stabilize the economy, which meant bringing prices down, which they achieved, ensuring that there was lesser volatility in the exchange rate, which they also achieved. We've seen appreciation of the Ghana cedi against hard currencies such as the dollar. And also we've seen a stabilization of the macroeconomy. What we're hoping was this to translate into the real economy where jobs are created. If because of this war, the Bank of Ghana can no longer continue to cut monetary policy rates to make the cost of borrowing cheaper for businesses in order for them to reinvest and expand those businesses, it might pose a big challenge for this flagship policy, which is the 24-hour economy. Because the whole idea behind this particular policy was for businesses to run multiple shifts, create more job opportunities, and therefore stimulate the economy that way. So if cost of borrowing is going to be expensive or continue to be expensive, or even the Bank of Ghana has to start increasing monetary policy rates again due to inflation going back up, then that derails the potential of this flagship economic policy being a success story. So our hope should be that this war is short-lived and we go back to a highly stabilized economy that is ready to invest in the real sector to create jobs for the teeming masses that have needs for jobs.
Right. Now, it's no news that Ghana is emerging from its worst economic crisis in decades and is expected to complete its IMF program, this year. How critical has the IMF framework been in anchoring macro stability in Ghana?
I think, if anything, it can only write a success story about the role of the IMF in this particular case. Remember, what took us to the IMF was a debt crisis that the economy was facing. We have accumulated debt significantly over the years, and this is not due to only one particular government. And at some point, due to external shocks such as COVID-19 and the Ukraine-Russian war, we had a situation whereby our credit rating had to be downgraded, leading to a loss of access to the capital markets, which means that you couldn't actually refinance and maturing debt or instruments that are, in the USD currency. And that crisis still exists because what the IMF has done was to force us to have some fiscal consolidation, make sure that we are more disciplined in terms of our expenditures based on the limited resources that we get through our tax revenues. Also make sure that, we were able to restructure our debt such that we have some bit of space, fiscal space, in order to pay them over time. Even though it came with some unintended adverse impact on the public, including individuals, but it was necessary. And the $3 billion bailout, which came in tranches and showed that we missed some particular earmarks, was also extremely important. So I would say, by and large, the IMF program was necessary for the success of us ensuring that we stabilize the macroeconomy. The challenge is going to be the fact that we're going to get out of the program pretty soon. And with that newfound liberty, are we going to continue to be disciplined to ensure that we don't go back to borrowing excessively? Because our debt stock is still very high, so that if we should get access to international markets again, and we continue to borrow significantly in the international markets in USD, such as Euro bonds, we could easily revert back to the situation we found ourselves prior to going to the IMF with bailout. So it's been a success story, but we need to be very cautious going forward so that we don't repeat the same mistakes that took us to the IMF in the first place.
Right, let's close with this. As Ghana moves from crisis recovery to expansion, what sectors are likely to sort of drive the next phase of growth for Ghana? We'll close on that.
Yeah, definitely. The service sector is the most dependable and has been steady in the past few years. So I expect the service sector to continue to do that. But if we're going to create the number of jobs that the teeming masses that are unemployed need, then my expectation would be for the agriculture sector and the industrial sector to play a much bigger role. And having some lineage or some integration between those two sectors is going to be extremely important. And that's the reason why I believe that if this flagship policy of the current government, which is a 24-hour economy, were to be a success story, then my expectation would be industrial sector, agriculture sector, and the service sectors all together and driving growth. But if for any reason, such as the US-Israeli-Iranian war, this policy is derailed, then it becomes a big challenge for the economy in terms of the real sector.
We hope that does not happen, as everyone is hoping that the war will be short-lived. Thank you so much, Dr. Josh Bamfo, partner and head of transfer pricing services practice, Andersen in Nigeria.
Thanks for having me.